What a week. Lehman Brothers gone. Merrill Lynch bought. AIG lent $85 billion from you and me. New rules for investing. $180 billion pumped into global markets. Right now, we do not yet know the details of what this monster bailout actually is, only that it will be massive and costly. And in the short term may have saved the economy from utter disaster. The long term? That's another question. Your money, your vote, your future. Let's talk about it. CNN's Ali Velshi is working the story. He joins us now. Let's start, Ali, breaking the news down. This plan being sent over to Capitol Hill. What do we know about it?
Last night was the setup. That was Henry Paulson, Ben Bernanke, Chris Cox, the chairman of the SEC, meeting with congressional leaders, laying down the law, saying, this is what we're going to need to do. Are you up to the challenge? They all came out. We reported this last night and said, we're up to it. Now that plan has gone from the White House to Congress, and they are going to work through the weekend. We could have a plan announced as early as Sunday night or Monday.
What theoretically does this mean? I mean, how does this bailout theoretically work?
What this means is instead of these weekly or every 2-week bailouts or issues where they're trying to save a financial services firm, they are going to try and figure out how much all of this bad debt is, create one big trust or entity that is going to take all that bad debt like a storm washes it and cleans up a street, and we are going to start as if there weren't all of this bad debt.
We've got other analysts who we're going to bring in a moment, but just on the facts, where is all this money coming from?
We don't have this money. The Federal Reserve doesn't even have enough money if it's going to be hundreds of billions of dollars, like Henry Paulson said today.
So this is going to print it up.
But they are going to have to issue bonds and sell those bonds and get money for them. That's what we call printing money.
So the idea is we're out of the woods. I mean, certainly the markets seem to react. Does this mean we're really out of the woods?
No. First of all, the market reacted the way it did for several reasons today. There were other market factors at play that caused that market to go up. I don't think we're out of the woods. We need to see what this plan is, how much it's going to cost, and what I think people are going to miss is we may have averted absolute disaster, but we are not going to see more jobs created. We're not going to see housing prices go up as an immediate response to this, and we might see stocks start to recover, but this is a backstop. This stopped us from sliding back further. It has not put us any further ahead.
I want to bring in some other analysts. Peter Schiff, author of Crash Proof, How to Profit from the Coming Economic Collapse. He's a financial advisor and financial advisor to presidential candidate Ron Paul. Also, John Fund of the Wall Street Journal and author of Stealing Elections, How Voter Fraud Threatens Our Democracy. Peter, Treasury Secretary Henry Paulson said that the government is taking such drastic action. Well, here's how he explained it. Let's listen.
I am convinced that this bold approach will cost American families far less than the alternative: a continuing series of financial institution failures and frozen credit markets unable to fund economic expansion.
You say he's dead wrong.
Well, he's constantly been wrong. Remember, this is the guy that said subprime was contained. This is the guy who a few weeks ago said the bazooka in his pocket would never have to be used, and now he basically launched a nuclear warhead. I mean, basically, you have to remember that the government is the one that infected the economy with this disease, and now this government cure is going to kill us. By trying to control the market,
you're saying,
well,
earlier on.
by artificial manipulating interest rates, because Alan Greenspan lowered interest rates down to practically nothing, and he force-fed all this cheap money into the economy. It's because of the Fed that we had all these teaser rates and adjustable rate mortgages. It's because of the Fed that we had a housing bubble. Without the Fed...
So you're saying this bailout is going to do what now?
Well, it's going to make the situation worse. All we're doing is creating inflation. We're not eliminating these losses.
Worse than what? Worse than every 2 weeks having a discussion about taking over a bank and then the Federal Reserve having to come up with money for it?
Look, banks are going to fail. They loan trillions of dollars to Americans who can't pay it back.
You say let the market work itself out. Well, we're going to have failure, we'll have a recession, but that will be less painful than what you say is going to happen down the road.
Just remember, if we would have had a more severe recession back in 2001, 2002, we wouldn't have had these problems. But the government intervened. They didn't want that recession, so they pushed off the problems. Now we're getting the problems in spades, and now you have the politicians again. They can only see as far as the next election. They don't care how much long-term damage they do. This is going to destroy the value of our currency and send prices through the roof.
I want to bring in John Fund. John, Fed Reserve Chairman Ben Bernanke reportedly told congressional leaders the financial system is maybe days away from a complete meltdown. Who do you agree with here? Is this better than what the alternative was?
I think it's a necessary evil. I agree with Peter on how we got here, but I also say I think you have to quell the panic because the panic is probably a little bit excessive. 2.7% of mortgages are in foreclosure. In the Great Depression, the rate was 20 times higher than that. We're nowhere near that. I think what we have to do is very simply clean up all of this stuff the way we did the savings and loan mess. It's going to be expensive. It's going to be painful. There will be inflation. But the savings and loan mess, we bundled all of the assets together. We cleaned them up, and we were able to sell them at a decent price later. We can get through this. The real problem, I think, here is a political crisis, not an economic crisis. Almost every member of Congress is up for election in 6 weeks. They were not going to sit around and do nothing and take even the smallest risk we were heading for a financial precipice. I don't think we were. But this is a political decision, not an economic decision.
Is it good to make economic decisions, Peter, in the midst of a political crisis? I mean, it wasn't the Homeland Security Department created in the midst of a political crisis?
Governments love crises because they get more power. You know, we got the withholding tax as a temporary victory tax in the Second World War. We won the war, but we still have the tax. You know, the problem is the government never cedes this power, and this is an economic crisis. Our economy is a mess. The very foundations of our economy are messed up.
Peter, the Reconstruction Finance Corporation lasted 7 years. It went out of business. It did its work. We did get rid of it. There is precedent for doing this and getting out of the market.
Look, we still have programs that were enacted during the Great Depression that are still around.
I'm simply saying, in the savings and loan, we got out.
Well, I don't trust it.
We did the job and got out.
But remember, this is an economic crisis,
that was said today by Henry Paulson, and he said how we got here and how we resolve this and how we regulate it in the future is a remarkable debate. It is not the debate for today, unfortunately. The debate today is to get something solved, and we have to solve it. Not solving it is no solution, because we have people losing jobs.
But, Ali,
we have homes losing value.
We're dealing with the symptoms. The disease is that our economy is screwed up. We don't save enough. We're borrowing a bunch of money from the rest of the world to consume.
Right.
That's not a viable economy.
This is not a solution.
We have
this
to
is
do
a
the
backstop,
opposite.
and I think you're right. This is a backstop, not a solution. The solution still has to come, but we do need a backstop.
Right, but John, what about that? I mean, we're borrowing money, huge sums of money for wars overseas. We're borrowing from China. We're borrowing from other countries, and now suddenly we're going to come up with another $1 trillion. Where does the money come from?
Well, first of all, foreign governments are still very much confident that the United States meets its obligations. Secondly, the dollar has strengthened. Excuse me, the dollar has strengthened the last few weeks, and the price of oil has come down.
That won't last.
Excuse me. Bottom line, we can get through this. The stock market recovered today. That shows short-term confidence in the financial situation. That means the panic is going to be stanched. We can get through this. I wish we didn't have to do this. But unfortunately, members of Congress panic. That's what they do,
John,
especially when they're facing voters.
If the Fed hadn't acted now, in your opinion, what kind of recession would we be facing?
Well, first of all, we're not in recession. We've had 2 quarters of economic growth.
Do you think we would be recession?
That's because the government is lying about inflation.
There's nobody who's left in America who believes that.
The government is assuming annual inflation is 1.2% a year. That's how they get these phony GDP numbers.
Look,
we're in a bad recession.
Look, one thing, the Federal Reserve should not be in the business of bailing out people and taking on bad assets. It should be put into something like the Resolution Trust Corporation, which we have. They're going to handle it. We got through this in the savings and loan debacle 20 years ago. Read your history.
So, okay, bottom line, just from each of you, without getting too sort of wonkish, because I know you're all much smarter than certainly I am on economic matters, but just for the general audience, let's start off, John, with you. What is good about what happened today? What is bad, from your opinion?
What is bad is the precedent that it sets for massive government intervention in our economy, bringing us closer to where the Europeans handle centralized economic decisions. What is good is we've stopped the panic. People all over the country right now are feeling a sense of relief that there's a light at the end of this tunnel. And next week, we're going to start sorting through the assets. We're going to try to find out how deep the hole is, and we'll get through the election. And the election is the biggest peril, because Peter, the one thing you don't want to do is have Congress.
For you, is there any good out of this?
No, this is a disaster. Don't believe the government. You know, the government is telling us that they're preserving our savings, protecting our bank deposits. They're going to loot our deposits through inflation. If you're smart, you'll pull your money out of your money market and out of the bank, buy gold, buy foreign currencies. They're going to turn the dollar into confetti.
You're saying even out of a bank, which is federally insured up to $100,000?
It's not safe. You get your money back, but you lose the value of your money. The purchasing power is going to collapse. Forget this phony rally we've had in the dollar in the last few weeks. The dollar is going to literally fall apart based on what they're doing.
Ali, that's pretty scary advice.
There is validity. The fact that if you keep printing money, that you just dilute the value of the money that you've got. These are all important discussions. The bottom line is we do have a crisis. We do not have a fundamentally sound economy right now. We need the government to admit that that's the case, and we need to have a plan. Now, if somebody's got a better plan than the one that's on its way to Capitol Hill at this moment, now is the time to talk about it this very weekend. If you don't, something has to happen.
All right, we're going to have to leave it there. Ali Velshi, Peter Schiff, John Fund, thank you. Interesting discussion. Appreciate it.